What is investing, bonds, and other securities? A corporate bond is a debt instrument issued by a business to raise money, unlike a stock offering with which investors buy and stake in the company itself. A bond is a loan with a fixed term and an interest yield that investor will earn. Ang bonds ay investment securities kung saan ang investor ay naglalet or nag-spend ng money sa isang company or government for a set period of time in exchange for regular investment payments. Once the bond reaches the maturity, the bond issuer returns the investor's money. So basically, once na nag-invest ka sa bonds or other securities, we can call the act liability. Are bonds a good investment? Key takeaways. Bond yields are likely to remain relatively high at least through the first half of 2023. Higher yields enable bonds to once again play their historical role as sources of reliable lower risk income for investors who buy and hold them to maturity. Like what I've said po kanina, the act of bond is like liabilities kasi bond can contribute an element of stability to almost any diversified portfolio. Ito ay safe, secured, and conservative investment. They can provide predictable stream of income when stocks perform poorly. And ito ay isang magandang idea to put your money kung ayaw mong malagay sa risk yung pera mo, and it's more safer than other investments. What happens when you invest in bonds? By buying a bond, you are giving the issuer a loan, and they agree to pay you back the face value of the loan on a specific date, and pay you periodic interest payments along the way, usually twice a year. Unlike stocks, bonds issued by companies give you no ownership rights. Once or when you invest in bonds, you're lending money to a company or government, and in return, you get regular interest payments called coupon payments. Cash or fixed interest kasi having a bond is like parang investment na low risk and less volatile than growth or other investments, and bonds is considered to be lower risk. Can you lose money investing in bonds? Bonds are often touted as less risky than stocks, and for the most part, they are, but that does not mean you cannot lose money owning bonds. Bond prices decline when interest rates rise, when the issuer experiences a negative credit event, or as market liquidity dries up. Ang disadvantage lang when you invest sa bonds is when the interest rates falls down, the prices rise. Bonds are considered less risky and safer investment than stocks, but they can still crash or may chance na malose mo some or lahat ng initial na in-invest mo. What does it mean to invest in securities? Securities in investing and finance. In the investing sense, securities are broadly defined as financial instruments that hold value and can be traded between parties. In other words, security is a catch-all term for stocks, bonds, mutual funds, exchange-traded funds, or other investment you can buy or sell. Investments are securities that have been purchased as an investment. This is in contrast to securities that are purchased by a broker-dealer or other financial intermediary for resale or short-term speculation. And also, investment securities are a category of securities, tradable financial assets such as equities or fixed income instruments that are purchased with the intention of holding them for investment. What are the advantages of investing in securities? Stocks can be a valuable part of your investment portfolio. Owning stocks in different companies can help you build your savings, protect your money from inflation and taxes, and maximize income from your investments. One of the major benefits of investing in the stocks markets are once na nag-invest ka sa bonds or other securities is that you can have or can get the chance to earn more money or mag-double the amount yung money na pinang-invest mo. What are examples of securities? Stocks, bonds, preferred shares, and ETFs are among the most common examples of marketable securities. Money market instruments, futures, options, and hedge funds investments can also be marketable securities. Should I invest in securities? While there are some valid reasons not to buy stocks, the upside potential outweighs the risk for most people, so it's almost always a good idea to invest in stocks. Even when the market is at an all an all-time high, studies have shown that what's more important than timing the market is an investor's time in the market. Explanation. Owning stocks in the different companies can help you build your savings, protect your money from inflation, taxes, and maximize income from your investments. It's important to know that there is when investing in the stocks of the market.